Hello, my dear students. A very warm welcome to all of you in Shri Jaindra Rank Zone. I am your friend and mentor for the subject Principles and Practices of Accounting. In this lecture, we will continue with Accounting Chapter 5, that is Concept and Accounting of Depreciation. All the concepts will be covered in the coming series of lectures. So let us begin. This is lecture number 13 for chapter Accounting 5. Today we are going to start with a new method, that is production units method. We are going to begin with productions unit method. Let us continue. Under this method, depreciation of the asset is determined by comparing the annual production with the estimated total production. The amount of depreciation is computed using the following formula or method. So depreciation for the period equals depreciation amount multiplied by production during the period divided by estimated total production. I repeat, depreciation for the period equals depreciation amount multiplied by production during the period divided by estimated total production. This method is applicable to machines producing the product of uniform specifications. The specifications is uniform in this kind of machines. Let us take an example to understand this in a better manner. Take an example. Right, example. Right, example. Cost of machines. Cost of machine 1 lakh. Cost of machine 1 lakh. Useful life. Useful life is 10,000 units. Useful life is 10,000 units of production. Useful life is 10,000 units of production. Scrap value. Scrap value is 20,000. Scrap value is rupee 20,000. Calculate. Calculate depreciation. Calculate depreciation for first year if if it produces 2,500 units in first year. If it produces 2,500 units in first year. We are doing production units method. We are doing production units method. Solution. Solution. Depreciation equals cost minus scrap value. Cost minus scrap value divided by estimated total production divided by estimated total production multiplied by current year production multiplied by current year production. In this question, the cost of machine is 1 lakh. The cost of machine is 1 lakh. The scrap value is 20,000. The estimated total production is 10,000 units. It is given in the question 10,000 units. 10,000 units. So we'll write 10,000 over here. And in the first year, we have used the machinery for 2,500 units. 2,500 units. Calculate it using calculator. 80,000. 80,000 by 10,000 multiplied by 2,500. So it is. So it is 20,000. It is 20,000. I believe you understood. It is 20,000. Production units method. Production units method. Let us do some notings. Let us do some notings under this method. Under this method, depreciation. Under this method, depreciation is determined. Depreciation is determined by comparing. Depreciation is determined by comparing the annual production. Comparing the annual production with the estimated total production. Estimated total production. Depreciation amount equals, how we calculate it, depreciation amount calculation. Depreciation amount calculation. Depreciation for the period. Depreciation for the period equals depreciation amount equals depreciation amount multiplied by actual production during the period during the period divided by estimated divided by estimated total production. Estimated total production, this we have just done in a sum. Let's write about the suitability of production units method. Suitability of production units method. The method is applicable to machines producing products products of products of Uniform specifications. Uniform specifications. Let us take one example. Cost of machine 1 lakh. Estimated total production 20,000 units. Estimated total production is 20,000 units. Actual output. Actual output during the year. Actual output during the year 1000 units. Let us calculate the depreciation. So depreciation for the year equals cost of machine, that is 1 lakh, multiplied by actual units, that is 1000, upon estimated units, that is 20,000, upon estimated units, that is 20,000. Quickly do it on your calculators. It is rupee 5,000. It is rupee 5,000. I believe it is clear. I believe it is clear till here. Let us continue. Write an illustration. Write an illustration in relation to this illustration. A machine a machine is purchased for rupee 4 lakh. Its estimated useful life its estimated useful life is 10 years is 10 years with a residual value of with a residual value of rupee 40,000. The machine the machine is expected the machine is expected to produce the machine is expected to produce 3 lakh expected to produce 3 lakh units during its lifetime during its lifetime. Expected distribution expected distribution pattern of production is as follows. The pattern of distribution production is as follows. Right, year production, year production, year 1 2 3, 40,000 units, 40,000 units per year, 40,000 units per year. Next year 4 to 7, 30,000 units per year, 4 to 7, 30,000 units per year. Next 8 to 10, Year 8 to 10, 20,000 units per year. 8 to 10, 20,000 units per year. Required, required, determine, determine the amount of depreciation, determine the amount of depreciation, determine the amount of depreciation of each year using production units method, using production units method. Quickly do it. Quickly try to do it. Let us understand the question once more. A machine is purchased for 4 lakh rupee. The estimated useful life is 10 years. Residual value is 40,000. Machine is expected to produce 3 lakh units during lifetime. Expected distribution pattern of production is given. Year 1 to 3, 40,000 units per year. 4 to 7, 30,000 units per year. 8 to 10, 20,000 units per year. Calculate. Solution. Right, solution. Statement. Statement showing depreciation. Statement showing depreciation under under production units method. Production units method. Write year. First you write year, then annual depreciation. Year, annual depreciation. Year and annual depreciation. Year 1 to 3. Year 1 to 3, we are producing 40,000 units. The total life is 3 lakh units. So 40,000 multiplied by 3 lakh, 40,000 multiplied by 3 lakh, 40,000 divided by 3 lakh. The cost of the asset is 4 lakh minus residual value is 40,000. Residual value is 40,000. So 40,000 divided by 3 lakh multiplied by 4 lakh minus 40,000. This is 48,000. This is 48,000. So 1, 2, 3 is done. Let us do it for year 4 to 7. Year 4 to 7, 30,000 units is produced. The expected units is 3 lakh during lifetime multiplied by 4 lakh minus 40,000. Solve it quickly. Solve it quickly. It is 36,000. It is 36,000. 36,000. Let's do it for year 8 to 10. Year 8 to 10, 20,000 units divided by 3 lakh. 20,000 units divided by 3 lakh multiplied by 4 lakh minus 40,000 multiplied by 4 lakh minus 40,000 equals equals 24,000. equals 24,000. I believe it is clear. Let us continue. Let's do this illustration. A machine is purchased for a machine is purchased for rupee 20 lakhs. Its estimated useful life is 10 years. The residual value is 2 lakhs. The residual value is 2 lakhs. The machine is expected to produce 1.5 lakhs. The machine is expected to produce 1.5 lakh units during its lifetime. Expected distribution pattern is given over here. Year 1 to 3, 20,000 units per year. Year 4 to 7, 15,000 units per year. And year 8 to 10, 10,000 units per year. We need to determine the value of depreciation for each unit using production units method. Right, solution. Let's solve it quickly. Solution. Statement showing statement showing depreciation statement showing depreciation under under production units method under production units method year annual depreciation year annual depreciation year and annual depreciation year, write year 1 to 3. In first year 20,000 is produced. The total is 1,50,000 units multiplied by 20 lakhs minus 20 lakhs minus scrap value is scrap value is 2 lakhs 2 lakhs. Solve it on your calculator. 20,000 divided by 1,50,000 multiplied by 1,80,000 multiplied by 18 lakhs. It is rupee 2,40,000. It is rupee 2,40,000. Let us continue. Let us continue. Year 1 to 3 is done. Year 4 to 7. Year 4 to 7. The production is 15,000 units. So 15,000 divided by 1,50,000 multiplied by 20 lakhs minus 2 lakhs. 20 lakhs minus 2 lakhs. 15,000 divided by 1,50,000 multiplied by 20 lakhs minus 2 lakhs. It's 1,80,000. 1,80,000. 1,80,000. Let's do it for year 8 to 10. Year 8 to year 10. The units produced is 10,000. Year 8 to year 10, the units produced is 10,000. So 10,000 units divided by 1,50,000 multiplied by 20 lakhs minus 2 lakhs. equals equals, do it on your calculators quickly, equals 1,20,000. 1,20,000. I believe you understood. 1,20,000. Let us move ahead. Let us move ahead. A new method, a new method, that is depletion method. This method is known as depletion method. So this method is used in case of mines, quarries containing only a certain quantity of product. The depreciation rate is calculated by dividing the cost of the asset by the estimated quantity of the product likely to be available. Annual depreciation will be the quantity extracted multiplied by the rate per unit. Let us do the notings properly. Right, depreciation equals depreciation equals cost of the asset, cost of the asset divided by total estimated extraction, total estimated extraction multiplied by current year extraction, current year extraction, current year extraction, we need to multiply it by current year extraction. Let us continue. Let us continue. Please write depletion. Depletion refers to depletion refers to the physical the physical deterioration the physical deterioration by the exhaustion of natural resources of natural resources, that is ore deposits in mines, oil wells, quarries, quarries, timber stands, etc. Timber stands, etc. It is a method. It is a method under which it is a method under which A A it is a method under which the life of A the life of the asset is estimated in terms of output, which could be raised during its life B. Depreciation. B. Depreciation is related to the quantity. Depreciation is related to the quantity taken out. Quantity taken out. This is basically amount of depletion, amount of depletion, and not the passage of time, not the passage of time. This method, this method when applied to, this method when applied to wasting assets, method when applied to wasting assets like mines, quarries, etc. Mines, quarries, etc. is is known as depletion method, is known as depletion method. Because why? Because wasting assets, because wasting assets cannot be depreciated, cannot be depreciated. Wasting assets cannot be depreciated, but can be gradually depleted, gradually during the passage of, so that could be gradually depleted. Let us continue. Let us continue. Next point, usefulness. Please write usefulness of depletion method. Usefulness of depletion method. It is used for depreciating depreciating natural resources, natural resources like like ore deposit, like ore deposit, oil deposit, oil deposit, etc. Ore deposit, oil deposit, etc. Rate of depreciation, rate of depreciation per unit, rate of depreciation per unit. Original cost minus scrap value, original cost minus scrap value divided by useful life in terms of in terms of productive output, in terms of productive output. Continue. Amount of depreciation, amount of depreciation, amount of depreciation equals actual output, actual output in units, actual output in units multiplied by rate of depreciation, rate of depreciation per unit, rate of depreciation per unit. I believe you must have understood till here. Rate of depreciation per unit. Suitability of depletion method, suitability of depletion method. This method this method is suitable. This method is suitable where this method is suitable where a the life of the asset the life of the asset can be estimated in terms of output in terms of output life of asset is estimated in terms of output. B the utility b the utility of the asset is is directly related to its productive life to its productive life. The utility of the asset is directly related to its productive life. And C obsolescence is not a primary factor. Obsolescence is not a primary factor. Obsolescence is not a primary factor. I believe it is clear. I believe it is clear till here. Write an example in relation to this. Write an example in relation to this. Cost of acquiring a mine. Cost of acquiring a mine equals rupee 1 lakh. Estimated quantity of coal in the mine. Estimated quantity of coal in the mine 20,000 tons. 20,000 tons. Actual output actual output in the year equals 1,000 tons. Actual output equals in the year is 1,000 tons. Quickly understand the example first. Cost of acquiring a mine is 1 lakh. Estimated quantity of coal in the mine is 20,000 tons. Actual output is 1,000 tons. Actual output is 1,000 tons. Here, how we will calculate the rate of depreciation? So write rate of depreciation. Rate of depreciation equals 1 lakh. 1 lakh, that is the cost of acquiring a mine. 1 lakh divided by 20,000. 20,000, that is the estimated quantity of coal in the mine. So 1 lakh divided by 20,000 equals rupee 5 per ton, equals rupee 5 per ton. Let's continue. Let's continue. Rate of depreciation is rupee 5 per ton. Now calculate the amount of depreciation. The amount of depreciation. So the amount of depreciation equals the total extraction is 1000 tons in this year, multiplied by rupee 5 per ton, which is rupee 5,000. Rupee 5 per ton, which is rupee 5,000, which is rupee 5,000. I believe it is clear. It is clear till here. Let us write one illustration. Let us do one illustration in relation to this. A Limited, A Limited acquired, A Limited acquired a lease right, A Limited acquired a lease right for 10 years, acquired a lease right for 10 years of a mine, 10 years of a mine on 1st of January 2013, 1st of January 2013 on a lump sum payment of rupee 9 lakh, rupee 9 lakh to the landlord, rupee 9 lakh to the landlord. It was estimated by it was estimated by the expert it was estimated by the expert that the coal deposit of the mine cold deposit of the mine was 40 lakhs tons was 40 lakh tons, 75% of which 75% of which could be raised 75% of which could be within raised within time period allowed raised within time period allowed. A Limited decided to depreciate A Limited decided to depreciate the lease on depletion method on depletion method. The sales and stocks in tons were as under were as under year sales and stock. Stock, closing stock. Year 2013, 2014, 2015, 2016, 2017 and 2018. Sales is 30,000, 62,000, 1,96,000, 4,02,000, 4,02,000 and 3,98,000. Closing stock is 10,000. Closing stock is 8,000. Closing stock is 12,000. Closing stock is 10,000. Closing stock is 8,000 and closing stock is 10,000. I believe it is clear. What is required in the question? Required, show the lease account, show the lease account from 1st Jan from 1st January 2013 to 31st December 2018. 1st January 2013 to 31st December 2018, 6 years. 6 years. We need to make lease account. Okay, we will make lease account. Solution. Solution. First, you understand the question once again. A Limited acquired a lease right for 10 years of a mine. The lump sum payment is 9 lakh. It was estimated that the total deposits, coal deposit is 40 lakh ton, 75% of which could be raised within the time period allowed. A Limited decided to depreciate the lease on depletion method. Sales is given from 2013 to 2018 and closing stock is given from 2013 to 2018. First of all, we need to calculate the depreciation. Right. Depreciation. Depreciation per ton. Depreciation per ton. Total cost divided by total cost divided by total expected output. Total expected output within lease period. Total expected output within lease period equals total cost is 9 lakhs. Total cost is 9 lakhs. The output is only 75% of 40 lakhs. 75% of 40 lakh tons, which comes to 30 lakh tons. So 9 lakh divided by 30 lakh equals, do it on your calculator, 9 lakh divided by 30 lakh, 0.30 per ton, 0.30 per ton, 0.30 per ton. Annual raisings, annual raisings is sales plus closing stock, sales plus closing stock and minus opening stock. Opening stock. Annual raisings equal to sales minus closing stock plus closing stock minus opening stock. Let us make lease account now. Let us make lease account from 2013 to 2018 for 6 years. Date, particulars, amount, date, particulars, amount. Date, particulars, amount, date, particulars, amount. Starting from 1st of January 2013 to bank account 9 lakhs. The lease is taken at 9 lakhs and 9 lakhs is paid. Lease account debit to bank account 9 lakhs. Depreciation year end 31st December 2013 by depreciation account by depreciation account by depreciation account. We need to calculate depreciation over here. How you will do it? Raisings we have already written, annual raisings, sales plus closing stock minus opening stock. So 2013 sales is given, that is 30,000 plus closing stock which is 10,000 minus opening stock is 0. Minus opening stock is 0. So it is 40,000. So it is 40,000 multiplied by 0.30 which comes to 12,000. Which comes to 12,000. So depreciation is 12,000. Buy balance carried down 8,88,000. Buy balance carried down 8,88,000. See it over here. 30,000 is the sales. Sales plus closing stock minus opening stocks. 30 plus 10 minus 0. Over here 2014. We'll begin for 2014 now. 1st of January 2014 to balance brought down. To balance brought down 888,000. 888,000. 31st December 2014 by depreciation. By depreciation, how you'll calculate the depreciation? Sales plus closing minus opening. Sales is 62,000 plus closing 8,000 minus opening. Opening is 10,000. See it very carefully. Sales plus closing minus opening. So opening of 2014 would be closing of 2013. So 2014 opening would be this 10,000. 62,000 plus 8,000 minus 10,000. Do it on your calculators. 62,000 plus 8,000 minus 10,000. 60,000. 60,000 multiplied by zero point 0.3. 18,000. 60,000 multiplied by zero point 0.3. So it is 60,000 now multiplied by zero point 0.3. Depreciation per unit 18,000. 18,000 by balance carried down. By balance carried down, it is 888, 000. Over here, 888, 000 minus 18,000. Minus 18,000, it is 8 lakh 70,000. It is 8 lakh 70,000. We have made the lease accounting for 2 years. Let us continue. Stretch these lines. Stretch these lines. Stretch these lines. Let us begin for 2015 now. 1st of January 2015, to balance brought down. To balance brought down. 8 lakh 70,000. 8 lakh 70,000. Year end we need to calculate the depreciation. 31st of 12 2015. 31st of 12 2015 by depreciation. By depreciation. For 2015, it is 1,96,000, that is the sales. 1,96,000, that is the sales, plus closing stock, which is 12,000, minus opening stock, which is 8,000. Minus opening stock, which is 8,000. Quickly do it on your calculator. 1,96,000 plus 12,000 minus 8,000. It is 2 lakh multiplied by zero point 0.3. It is 2 lakhs multiplied by 0.3. It is 60,000. It comes to 60,000. So it would be 8 lakh 70,000 over here. We will transfer it on the credit side. 8 lakh 70,000 minus 60,000 is 8 lakh 10,000. 8 lakh 10,000 by balance carried down. By balance carried down. Stretch these lines. Eight lakh 10,000 for 2016, 1st January 2016, to balance brought down. To balance brought down 8 lakh 10,000 on 31st of December 2016. 31st December 2016 by depreciation. By depreciation account. By depreciation account. For 2016 we need to calculate 4 lakh 2,000 plus 10,000 minus 12,000. Do it on your calculator. 4 lakh 2,000 plus 10,000 minus 12,000. It is 4 lakh. 4 lakh multiplied by 0.3, 120. It is 4 lakh multiplied by 0.3. It is 1 lakh 20,000. It is 1 lakh 20,000 over here. Let us do the totals. 8 lakh 10,000. 8 lakh 10,000 minus 1 lakh 20,000 minus 1 lakh 20,000, 6 lakh 90,000 by balance carried down 6 lakh 90,000 by balance carried down 6 lakh 90,000. Stretch these lines a bit. First January 2017 to balance brought down. 1st January 2017 to balance brought down 6 lakh 90,000. 6 lakh 90,000. Year end 31st of December 2017 by depreciation accounting for 2017, 4 lakh 2,000 plus 8,000 minus 10,000. 4 lakh 2,000 plus 8,000 minus 10,000. Do it on your calculator. 4 lakh 2,000 plus 8,000 minus 10,000. It is 4 lakhs. So 4 lakh multiplied by 0.3. 4 lakh multiplied by 0.3. It is 1 lakh 20,000. It is 1 lakh 20,000. Now close it quickly. Over here, close it quickly. Over here, 6 lakh 90,000. 6 lakh 90,000 would be transferred to credit side. 6 lakh 90,000 minus 1 lakh 20,000 is 5 lakh 70,000. 5 lakh 70,000 by balance carried down. By balance carried down. Last year, stretch these lines a bit. For 2018, 5 lakh 70,000 to balance brought down. To balance brought down 5 lakh 70,000. 1st of January 2018 on 31st of December 2018 by depreciation account 3,98,000 plus 10,000 minus 8,000. 3,98,000 plus 10,000 minus 8,000. Do it on your calculator. 3,98,000 plus 10,000 minus 8,000, which is 4 lakhs. Again it is 4 lakhs. 4 lakhs multiplied by 0.3 is 1 lakh 20,000. Is 1 lakh 20,000. Let us do the total. 5 lakh 70,000. Let us close it. 5 lakh 70,000 minus 1 lakh 20,000. 5 lakh 70,000 minus 1 lakh 20,000 equals 4 lakh 50,000 by balance carried down 4 lakh 50,000. 4,50,000. Clear? So we have done the accounting for lease over here. We have done the accounting for lease. We have made the lease account. Let us move ahead. Let us move ahead now. Solve this illustration, illustration 9. Let's do this illustration, which is illustration 9. Messrs. Surya took lease of Quarry on 1st January 2013 for rupee 1 crore. As per technical estimate, the total quantity of mine deposit is 2 lakh tons. 2 lakh tons. Depreciation was charged on the basis of depletion method. Extraction pattern is given in the following table. 2013 2,000 tons, 2014 10,000 tons, and 2015 it is 15,000 tons. Required. Show the query lease account. So we have to make lease account and depreciation account for 3 years, which is 2013 to 2015. 2013, 14 and 15. We need to make lease account for 2013, 14 and 15. Let us begin now. Solution. Solution. Query lease account. Query lease account. Draw the format of account. Date. Particulars. Amount. Date. Particulars. Amount. Date. Particulars. Amount. Date. Particulars. Amount. Let's do it for 2013. Let's do it for 2013. 1st January 2013 to bank account. 1st January 2013 to bank account 1 crore. 1 crore. Now we need to calculate depreciation on 31st of December. We need to calculate depreciation on 31st of December by depreciation. By depreciation. By depreciation. Quantity of mineral extracted in 2013 is 2000 tons. The total deposit is 2 lakh tons. So it would be 2000 divided by 2 lakhs. Out of 2 lakhs tons, we have extracted 2000 tons multiplied by the lease taken amount, that is 1 crore. 1 crore multiplied by 1 crore. Try to solve it quickly. Do it on your calculators. It is 1 lakh. It is 1 lakh. Close it. Buy balance carried down 99 lakhs. Buy balance carried down 99 lakhs. Buy balance carried down 99 lakhs. Stretch these lines. Buy balance carried down 99 lakhs. 2014. Year 2014. 1st January. To balance. To balance brought down 99 lakhs. To balance brought down 99 lakhs. 31st December by depreciation. 31st December by depreciation. Extracted amount is 10,000 tons, so 10,000 divided by 2 lakhs. 10,000 divided by 2 lakhs. Multiplied by 1 crore. So 10,000 tons divided by 2 lakhs multiplied by 1 crore equals 5 lakhs. Equals 5 lakhs. Do it on your calculators quickly. Equals 5 lakhs. Total 99 lakhs. 99 lakhs minus 5 lakh is 94 lakhs. Is 94 lakhs. Over here it is by balance carried down 94 lakhs. By balance carried down 94 lakhs. Let us go to the third year now. Let us go to the third year now. 2015. 2015. 1st of January 2015. To balance brought down. To balance brought down 94 lakhs. To balance brought down 94 lakhs. Let us calculate the depreciation. 31st December by depreciation. By depreciation amount 15,000 tons divided by 2 lakh tons multiplied by 1 CR. So 15,000 divided by 2 lakhs multiplied by 1 crore. Do it on your calculators quickly. 15,000 divided by 2 lakhs multiplied by 1 crore. 7,50,000. 7,50,000. Close it. 94 lakhs. 94 lakhs minus 7,50,000. Minus 7,50,000. 86,50,000. The closing amount is 86,50,000. Buy balance carried down. Buy balance carried down 86,50,000. Understood? Buy balance carried down 86,50,000. Now let us make depreciation account as required by the sum. We are done with the lease account, the query lease account. Now let us make the depreciation account from 2013 to 2015. Depreciation account. Depreciation account. Quickly draw the format. Draw the format quickly. Date, particulars, amount. Date, particulars, amount. Let's begin with 2013. 2013. 31st December to query lease account. To query lease account, the depreciation amount, which is 1 lakh. Which is 1 lakh. Totals is 1 lakh. Transfer the total on the credit side. This 1 lakh would be transferred to on the same date, 31st December. This is transferred to profit and loss account. So by profit and loss account 1 lakh. By profit and loss account 1 lakh. Now do it for 2014. For 2014, 31st December to query lease account. To query lease account. To query lease account, let us see the amount, which is 5 lakhs. Amounts is 5 lakhs. Totals is 5 lakhs. Transferring this total on the credit side, 5 lakhs. 31st December by profit and loss account. By profit and loss account. By profit and loss account. 2015, we need to do the accounting only for 3 years. In 2015, 31st December to query lease account. To query lease account, the amount of depreciation is 7,50,000. It is 7,50,000. Transfer this 7,50,000 on the year end to profit and loss account. Transfer this to profit and loss account. 31st December by by profit and loss account 7,50,000. By profit and loss account 7,50,000. I believe it is clear. I believe it is clear. Let us see what we have done in today's class. What we have learnt in today's class. We began today's class with the production units method. Production units method. So depreciation is charged on the basis of units produced. We have done this. We have learned the formula to calculate depreciation. We have learned this example and calculated the depreciation amount. Taken some important note in relation to production units method, where this method is suitable, its merits and demerits. Then we have taken an illustration on production units method. We have done illustration 8 on the basis of production units method. Then we shifted to a new method which is depletion method. We shifted to a new method which is depletion method. We learned the formula. We learned a bit basics about depletion method, its suitability, in which situations it should be used. We have done this example. We shifted to an illustration on the basis of depletion method. It was an exhaustive illustration. This is really going to help you. We had made lease account in this illustration for 6 long years, from 2013 to 2018. We have drawn this for 6 years. We have calculated the depreciation amount, and then we recorded the balance carried down. One thing over here, for calculating the depreciation amount, the annual raisings, we have used this formula, that is sales plus closing stock minus opening stock. So just see it over here. In 2014, the sales is 62,000, the closing stock is 8,000, and the opening stock would be taken from 2013, because the closing stock of 2013 will act as a opening stock for 2014. So 62,000 plus 8,000 minus 10,000. Same as 2015, 1,96,000 plus 12,000 minus 8,000. I believe you understood. I believe you understood this. So on the basis of it, we done the lease accounting. We have made the lease account. And at last we have solved this illustration, that is illustration number 9, where it is required to make query lease account for 3 years, from 2013 to 2015, and also we need to make depreciation account from 2013 to 2015. So first, in this, we have made query lease account. We have calculated the depreciation account internally. How the depreciation we have calculated? So mineral extracted from the query, that is 2000 tons. The total mineral deposit in the query, that is 2 lakhs tons. So 2000 divided by 2 lakhs multiplied by the total lease amount, that is 1 crore. So multiplied by 1 crore, we have done like this. So in this way we have completed the query lease account for all the 3 years, and then we have transferred the amount of depreciation to profit and loss account. For all these 3 years, we have transferred the amount of depreciation to the profit and loss account. So for 2013, we have taken the amount of depreciation from query lease account, which is 1 lakh, and then we have transferred to profit and loss account on the same day, that is 31st of December. The same 1 lakh is transferred. On the same basis, we have taken this 2014. So this query lease account, which is 5 lakh, and this is also transferred to profit and loss account, that is 5 lakh. In the last year, which is 2015, again we have taken this depreciation amount from query lease account, that is 7 lakh 50,000, and we have transferred it to profit and loss account, which is 7 lakh 50,000 over here. And in this way we have completed the depletion method over here. We will begin with the next method, but we will start the next method in the next class. We'll start the next method in the next class. Till then, revise this properly. Thank you. We are stopping here. We are stopping here. Thank you.